Good morning, YouTube. Louie here, and today I've got a special edition of the show. Karl Ushanka has reached out to me again, and has asked me to consider some new projections that he has made, and I want to share those with you and get your thoughts. Those of you that don't know Karl, he is the author of Trade the Ratio. That is the gold to silver ratio. You can get that book on Amazon. And in that book, he explains how to use the gold to silver ratio. Right now, I think it's sitting in the high 60s, and has been as high as 110, 120, and historically has been as low as 10. Many people look to 40. As a kind of a normalized gold to silver ratio. So you could trade, over time on average, you could trade 40 ounces of silver for an ounce of gold. Well, most recently it had been in the 70s and 80s, meaning that gold was a lot more expensive than silver. And then we had that spike down in March, which took the ratio, took silver down to the 12s, gold down to the 1400s, I think. We all know silver is more volatile down and up, and pushed that gold to silver ratio up above 110, I believe. Well, Karl is one of the only people that I know that actually actively trades the ratio, and when that ratio got to 110, it sounded alarms in his mind, and he bought paper silver. Now, when it went to 110, you couldn't buy physical because the premium shot up to $10 or something. But in the paper market, it's to your advantage, and he pulled. He bought call options on the SLV. Anyway, really smart guy. And if we all had been trading the ratio, imagine if you had traded your gold, or let's just say half. Okay, take half your position in gold and had traded that for silver at 110. And this is a paper trade. I recognize that the physical is more difficult to do that with. But, if you could have done that on paper, you could have gotten 110 ounces of silver for every ounce of gold. Today, when silver is sitting in the 60s, you could have traded that back for gold, now that silver is more expensive, and nearly doubled your gold position in a period of less than 1 year. That's what his book is all about, but that is not what the video today is about. He sent me something new, and I think we want to pay close attention to it. So let's get into the numbers. All right, here we are on a spreadsheet that he did, and what he is looking at is a stimulus as it affects the price of silver. All right, as you know, we've had a previous stimulus package. The one that he notes here is when Trump signed the $2 trillion pandemic stimulus on March 27th, and at the time we all thought $2 trillion was a lot of money, but as we know, this is going to continue, and I'll talk a little bit about the stimulus at the end of this. But all he has done is mark time from the point of the stimulus issuance out 136 days, and what he has found here is let's see, within 54 days of the signing of a stimulus plan, a significant stimulus plan, the spike in silver prices ends, and the high was 1772 compared to the low of 1461. I do think 1461, though, was a pretty depressed price. The gain in 54 days was 21%. And then he said, when was the next spike, the end of the next spike? Well, silver, after 122 days, hit $24.53. That is a 67.9% gain. but it was not played out yet. It was a full 136 days later, on August 10th, that silver was at 29.25. All right, that is 100% gain. So his speculation here is give silver 136 days from the signing of the next stimulus plan, Biden's 1.7, or is it 2.7? 1.7, I think, trillion dollar stimulus plan, and we could see another 100% rise in the price of silver. Today's silver is $27.50, so that would put it at about $55. Completely plausible. All right, so now he's triggered this off the signing of the stimulus, and I'm not so sure that is the most relevant date, because just because Biden has signed the stimulus plan doesn't mean that it's going to take effect. It could linger in Congress for several weeks. So I'll leave that up to you to figure out what the trigger date is. The plan is not a slam dunk. There are several Democrats that are not in favor of such a large plan, or possibly they're not in favor of some of the components of the plan. And Biden now has to reach across the aisle to the Republicans to find out if he can find any like-minded Republicans that will pass the stimulus. I think in one iteration or another, I think the 1.9, sorry, I had that number wrong, the $1.9 trillion stimulus, or something very close to it, will pass very soon. All right, so I'd give that 2-3 weeks for them to push that through Congress. I think that's partly why the stock market is kind of trading in a range and kind of threatening to go down here. But 100 days from now, could we see $55 silver? What do you think? Okay, here are some questions that he wants to ask. All right, so the first question is, will silver react the same to the second stimulus? And think about that for a second. Well, I guess you could say we're already acclimated to stimulus and it would have less effect. But then you could also say that the fiscal situation is much, much more dire. And of course, what's even more significant than the stimulus to Americans is the trillions that we're sending around the world of American money right now. So I don't know, jury's out on that one. Was spot artificially low in March of 2020? Yeah, absolutely. Spot had been hanging in the 18s, 18s or so before the smackdown. So, when I do analysis, as I told Karl, I take the March lows out of the analysis, because that was unusual, and it was a liquidity-driven event, and it recovered so quickly. So I take those out. It was also, though, a tremendous opportunity if you were actually trading the ratio. Some of us got scared down there and wondered if it was the end of the world. And, when silver was at 12, what we were all doing, well, everybody I know anyway, we were raising cash, because we didn't know if, the stock market was going to go to zero. Of course, metals will always have value, but, I think you have to use your head and not your emotions when these matters happen. And buying silver at the March lows was obviously a no-brainer. There's also a history of silver making new highs after it makes new lows. So it's kind of like a slingshot. All right, number 3. Are there more investors now who use PMs to hedge against trillion-dollar stimulus? I think that's true by looking at the inflows to the SLV, and I think the GLD as well. So whether that's paper or real silver, I don't know, but I think they're using physical, and I think they're using paper at a very increased percentage. By the way, I think I'll do a video on this, but I'm moving my SLV investments over to PSLV. And that is the Sprott fund. And if you read the prospectus, they buy the bullion. they don't mess around with futures and hedging and loaning and so forth. PSLV is my favorite paper silver right now. Next, will investors take as long to move into silver this time? Good question. No, I don't think so. I don't think so. I think silver is hovering here in the high 20s and just waiting for its opportunity to bust through. Of course, they'll have to get through an army of JP Morgan trolls that are going to try to smack it down. But just like when Nixon lost control of gold, it's going to happen. It has to happen. Industry will make it happen, even if the private investor does not. And finally, assuming estimates are correct, at what ratio will the big investors switch to gold as their hedge? Well, I think silver will have to spike before they will do that. This may be contrary to many people's belief, but I think that investors in gold that have ignored silver will literally curse their gold investment when they see what silver can do. But I'm agnostic. I actually favor silver, but I'm agnostic to gold because it does move up over time consistently and safely, stodgily, grudgingly, but it marches upwards. So I keep 50-50 as my split, but I do not expect my gold investment to perform as well as my silver investment. And when silver makes its big move and people wonder why they didn't own it, that's when I'll be trading for gold, because silver comes back down. It does. It moves like Bitcoin, in a way. All right, those are his questions. And then he asked me to read a paragraph. Those numbers were taken from the APMEX silver prices. Let's see if I can get this paragraph. Here it is. All right, this is from Karl. We all know precious metal values are linked to the US dollar and international stability. But these, hold on one second. I think it says, oh shoot, I need to make this a little bit smaller. There we go. Let me start over. We all know precious metal values are linked to the US dollar and international stability. But these predictions above show that the true link is to the US political environment, as those in power can control or at least influence those two factors. Another lesson learned, and the most valuable advice in the book, this is gold to silver ratio, the next time you see the nation shift left prior to a presidential election, adjust your portfolio to accommodate more precious metals. Individual results may not vary or may vary. This is not financial advice from Karl or I, but left-leaning government definitely brings inflation in my opinion, and probably brings a devalued dollar to a greater extent. So get the book if you want to read Trade the Gold to Silver Ratio. Lots of statistics for all of you mathematical people. But the proof is in the pudding. I mean, if you were going to trade the ratio in paper, and I recommend holding the physical, which I do. My paper positions are a small part of my holdings. But literally what you would do is, if you thought the ratio was going to 50, for example, which is what Karl thinks, I think so too. At least in the 50s. What you would do is you would put on equal weight, long SLV, short GLD. That'd be trading the ratio. If it went the other way and silver, the GSR went to 110 again, well, you'd reverse that trade. But what do you think? What do you think of Karl's idea? And do you think the stimulus has a delayed impact on silver prices? Let me know your thoughts below. Thanks, everybody.